Good day. My name is John Zvanovich from Ottawa, Canada, which incidentally has nothing to do with BRIEX whatsoever. My question more goes back to the discussion of intellectual capital, in particular, perhaps your intellectual reserves. In so speaking of security analysis, the first edition in 1934, Ben Graham talked about the development of the New Era theory and its consequences on the security business. In today's terms, we see a lot of the same words and phrases being repeated by analysts on Wall Street. And with the historical returns on common stocks dating back to the 1800s coming in at about 7%, pair that together with the concept of regression to the mean in statistics, do you not think that we're in a very dangerous period?
Well, the answer, we never know. I mean, we in terms of what markets will do, I don't think that the Coca-Cola company is in a dangerous position, in a dangerous era, or Gillette is in a dangerous era, or McDonald's or Wells Fargo or whatever, but or See's Candy, or the businesses we own in their entire, Kirby, whatever it may be. Whether valuations are too high gets back to the question that we talked about earlier. If for businesses in aggregate they keep earning very high returns on equity and interest rates stay where they are, we are not in an overvalued period. If it turns out that these returns are not sustainable or interest rates go higher, we will look back and say this was a high point, but for at least for a while. But we have no notion on that, and we really don't think about it. Basically, because we don't know. Our job is to focus on things that we can know and that make a difference. And if something can't make a difference or we can't know it, we write that one off. So we're looking for the
But Warren, you would expect average returns from stock market index type investing to regress somewhat down.
Oh, I don't think
what they've been the last few years.
I don't think you'll get the investment result from owning the S&P over the next 10 years that you've gotten over the past 10 years. I would if someone wanted to put some real money on that, they would find a taker with me. That's very unlikely to happen.
That's not predicting a crash. It's
No,
just saying that the guaranteed result from the next 10 years is almost certain to be less than that of the last.
It wouldn't surprise. I mean, this is in no way predictive. I mean, it wouldn't surprise us in the least if stocks average 4% a year, for the next 10 years. That doesn't mean they will, or we don't know the number. But that would not be a surprising outcome, and it wouldn't bother us particularly either. Charlie, what?
No.